What does debt cause us? Stress, worries, and long afternoons of math and calculations. You know what it does to millionaires? Even more money. I know it sounds outrageous, but today I'm going to show you 6 secret methods that millionaires use to generate profits through debt. Stay until the end if you want to be one of them. Corporate finance and international trade. Millionaires typically base their businesses on relationships, both domestic and international. Let's take an odd example. Imagine starting a business selling pens. The key here is that you don't have to have the money up front. Instead of paying up front for the pens you want to sell, you can establish relationships with factories in China. These factories will be willing to send you products without immediate payment. Once you sell these products in the United States or elsewhere in the world, you can use the profits to pay the Chinese factory. This strategy involves borrowing the products, helping the factory sell them, and generating profits for you. The magic is that you are not using your own money in this transaction. China, as the world's factory, has allowed entrepreneurs to borrow and sell products without the need for initial capital. This practice, common in international trade, shows how debt becomes a valuable tool for growing businesses. This unconventional approach challenges the notion that borrowing to start a business is always risky. The key is to understand the market, build trust with suppliers, and use debt strategically to facilitate business transactions, turning it into an ally for business growth. This approach demonstrates that, in certain contexts, debt can be a powerful wealth-building tool in the hands of entrepreneurs and business owners. They generate profit first and pay it back later. Real estate debt refinancing. Let's say you have substantial savings, but perhaps not enough to purchase a valuable property. Enter real estate debt refinancing, a strategy used by the wealthy to maximize their investments. Suppose you have $200,000 in savings. While this may seem like a substantial amount, it's a modest amount for experienced investors. Instead of using that $200,000 to buy a property, you look for a $500,000 property that needs renovation. Get a 20% mortgage, which means you only have to spend $50,000 on renovations. After the renovation, the market value of the property may increase to $700,000. Now you go back to the bank to refinance the mortgage. Since the value of the property has increased, you can get an 80% mortgage on the $70,000, which is $560,000. Pay the remaining $400,000 to your first bank and subtract $50,000 for renovations. The result, an additional profit of $110,000. This method not only leaves you with a property to rent for passive income, but also avoids additional taxes thanks to the mortgage. By maintaining multiple mortgages, the wealthy make the most of allowable tax deductions. Refinancing real estate debt is more than a financial strategy. It's a way to make money work for you. By understanding how to use debt effectively, real estate investors can unlock additional profits and build wealth through real estate. Smart debt refinancing. Millionaires often strategically have debts refinanced to increase their wealth. This intelligent approach is a useful tool used by the wealthy to maximize their assets and minimize costs. Here's how it works. Instead of viewing debts as a burden, the wealthy see them as opportunities to optimize their finances. Smart debt refinancing involves restructuring existing loans to secure more favorable conditions, such as lower interest rates or extended payment terms. A practical example is mortgage refinancing, as mentioned earlier. Suppose you own a property that has increased in value since you acquired your mortgage. By refinancing, you can obtain a new mortgage with lower interest rates, thereby freeing up additional capital. This extra money can be reinvested to generate more income or strategically used in other investments. Refinancing can also be applied to debts with high interest rates, such as credit card debts. Consolidating these debts into a loan with a lower rate can save money on interest and expedite the payment process. This approach not only reduces the financial burden, but also frees up resources to seize investment opportunities. The key is to use debt as a strategic tool to improve the overall financial situation. By adopting a smart approach to debt refinancing, the wealthy manage to optimize their cash flows and maximize the profitability of their investments. This practice shows that debt is not always negative. when handled wisely, it can become a significant driver of wealth and financial prosperity. Thus, strategically refinancing becomes an essential tactic for those seeking to increase their wealth and achieve long-term financial success. Hedge funds and short trading. Now, let's meet the so-called hedge fund. This is an important tool in their arsenal. These funds, created by and for the wealthy, often resort to short selling in order to profit even when companies are in decline. Imagine predicting a stock like Facebook is going to go down. Hedge funds don't settle for growth forecasts, they bet on the downside. They call their broker and borrow a share of Facebook, which they then sell on the open market. If the prediction comes true and the price of Facebook falls, they will use the proceeds from the initial sale to buy back the shares at a lower price. The difference between the initial sale and the subsequent purchase becomes a profit. Congratulations, you've made money betting on the decline. However, there are significant risks associated with this strategy. If the stock goes up instead of down, the losses can be unlimited because you will have to return the borrowed shares to the broker at a higher price. Although it may sound risky, hedge funds, backed by experts and thorough analysis, use these short sales to profit even in bearish scenarios. I think we can say that hedge funds and short selling are a lesser known but powerful aspect of how the wealthy use debt to increase their wealth. Foreign exchange or forex trading. And sometimes you need to explore unique opportunities, and one of them is the foreign exchange market, also known as forex. This market allows for the international trading of currencies and offers a unique opportunity to use currency fluctuations to make substantial profits. Imagine being able to predict changes in the value of currencies. For example, if you expect the dollar to strengthen against other currencies, you can buy dollars at a lower price and sell them when their value increases. But here's the kicker. In Forex, you can borrow a significant amount relative to the amount you actually own. This leverage allows investors to trade with much larger amounts than their initial investment. For example, you can control a $100,000 position with as little as $1,000. If your predictions are correct and the market moves in your favor, even small fluctuations can turn into substantial profits. The secret lies in understanding the factors that influence currency rates and making informed decisions. Economic, political, and social events can dramatically affect the value of currencies. The wealthy use this knowledge, backed by detailed analysis, to take advantage of these opportunities. Trading in the foreign exchange market isn't just a matter of buying and selling, it's a sophisticated ability to predict and react to global events. This is how the wealthy enter the world of Forex. Strategic use of credit notes. Letters of credit become a powerful tool here too, and their strategic use means a significant boost to business success. Imagine being able to access large amounts of capital without having to pay large sums up front. For savvy business owners, it has become commonplace to seek loans to finance purchase orders. This approach not only frees up financial resources, but also allows you to take advantage of business opportunities without tying up your own capital. How does it work? Suppose you have a proven business model and demand for your products is growing. No, wait, earlier we explained what an invoice is. Let's put it this way. A credit memo is a financial document issued by a seller to a buyer indicating that there has been a decrease in the amount owed by the buyer. It's essentially a correction to a previously issued invoice. It can be due to product returns, discounts granted, or billing errors. The credit memo reflects the amount credited and the reason for the credit, providing transparency in business transactions. This is where the credit memo comes in. You can borrow money to finance large quantities of products that you know you can sell successfully. This strategy not only increases your ability to fulfill customer orders, but also enables you to expand and consolidate your business without relying solely on your current resources. The smart use of credit goes beyond financing purchase orders. By building a history as a reliable borrower, you can access lower interest rates, minimizing the cost of debt. I know it can be a little difficult to understand, but once we align the steps of these processes, debt will turn into profits, and not just any profits, but strategically earned profits. These were some of the financial secrets of millionaires who used debt to make money. If you know any, it would be interesting for you to share them in the comments section. If you like this video, don't forget to subscribe and activate the notification bell so that your wealth multiplies.